When you look at your 401k and you look specifically at what you're invested in, do you see a year at the end of the name? So like something, something, something 2040? If so, then you are invested in what we call a target date fund, and you are not alone. It's estimated that almost 97% of all 401k plans offer target date funds, and that more than 42% of all 401k monies is invested in these target date funds. So what are they? Well, let's start first with all of the investment options in your plan. Most likely you have a whole series of target date funds spaced 5 years apart, and then you have what we call a list of sidebar options. The other options available are most likely funds like a mutual fund or a CIT, and each one represents a specific category. In our world, we call those asset classes. So for example, you may see an S&P 500 index fund. That particular fund mimics the S&P 500 index, which is stock in the US's largest 500 companies. Or you may see a short-term government bond fund. This is a fund of short-term government bonds. Each sidebar option will have a specific category and a specific strategy. Now, you can use those options to build your own diversified portfolio. You can put a specific percentage of your account in each fund, build your own model, and manage your investments. Now, if everything I just said sounded like Greek to you and your eyes started to cross, then you can pick the easy button, the target date fund. These funds will do a number of things for you. First off, by nature, they're already diversified across many different asset classes. So even though it looks like one fund, it's actually a fund of funds, and almost all of those sidebar options you see listed are already included in the target date fund. So when choosing one, you really just pick the one. You don't necessarily want to add other investment options to it. Number two, the second thing the target date fund does for you, even if you don't do anything, is it naturally gets more conservative the closer you get to your target date. Generally, your target date will fall sometime around your age 65 or your presumable retirement. Try not to get too caught up on that specific year. Nothing dramatic happens. Your account doesn't automatically liquidate. It doesn't mean you can't save anymore. It's really just a target in the future that the manager of the fund is using to as an estimate for retirement to slowly adjust the risk of your account over time. For someone who is not investment savvy, target date funds can be a great and low cost solution. You have a portfolio manager automatically diversifying your account, managing your risk, and rebalancing your portfolio. They can have their flaws. Namely, you are being invested in a strategy purely based on your age. That strategy may be too aggressive or too conservative for you. Maybe your age 65 isn't a reasonable target date. If you believe that you need the funds sooner, or that maybe you're a little bit more conservative of an investor, you can always choose an earlier year. If you think 65 is too early and you may not need the funds until later, or you consider yourself a more aggressive investor, you can always choose a later target date. But for the most part, especially for you younger investors, still 20 plus years from retirement, these can be a really great option. It's why most plans use them as the QDIA, the Qualified Default Investment Alternative. If you have been automatically enrolled into the plan, or you didn't select your own investments, there's a pretty good chance you were defaulted into the target date fund. You can learn more about your particular fund by logging into your 401k, finding the fund, and clicking the blue link that opens up the fund fact sheet. This will show you the cost, the largest holdings, and even the glide path. There are many different managers of target date funds, and they're not all standardized. This is the best way for you to see your fund's specific strategy. That's it for this week. This is Jeannie, the 401k lady.